We can go ahead and get started here, just to go ahead and keep time. So, thank you for joining here for our access to banking presentation that we're doing here with our great hosts, Home SF. I'm Tori Tibbetts. I'm with the San Francisco LGBT Center, and I'm also joined with Mandy with the Treasurer Tax Collector.
Hi everyone, I'm Mandy from the Treasurer and Tax Collector.
Great. So just some housekeeping here at the top. So this presentation is being recorded for the Home San Francisco YouTube channel, so you can watch it back later or share it with someone who you think might also find it valuable. You can add questions in the Q&A section at any time. We're going to be answering them throughout the presentation, and then any that are left we can answer at the end as well. We're also going to have time for Q&A at the end too. As we list there. And then if you're having any technical difficulties, you can email info@homesanfrancisco.org for support. So there is closed captioning available for this presentation as well. So in order to turn this on, you're going to want to go down to the bottom of your screen and hover over the CC icon to enable those captions. And you're also able to set different languages for these captions too. If you click on the arrow button, you're able to select the language. And then if you're on a phone or a tablet, depending on how you signed on, you're going to click those three dots for more, and that's going to show you that same CC icon and follow those same steps. Then it's a little more information about our hosts, Home San Francisco. So Home San Francisco is a collaboration of 5 experienced nonprofit housing agencies. That's Asian Inc., Balance, Meta, the San Francisco Housing Development Corporation, and the San Francisco LGBT Center. They serve as a centralized hub for local affordable housing resources. Home SF connects renters, home buyers, and homeowners with education, counseling, and resources. Your real one-stop shop for everything affordable housing in the city. And this is the formal introduction to access to banking, where we're going to cover financial counseling and BankOn and talk everything bank accounts. I want to invite you to please fill out our sign-in sheet. We have the link there and also the QR code. We'll hold here for just a second for you to scan that. It's just a couple of quick questions about yourself to ensure that we're reaching all San Franciscans and that we can continue to offer these free workshops. So if you could please fill that out, we'd greatly appreciate it. Great. And then, as I was saying, my name is Tori Tibbetts, and I work for the San Francisco LGBT Center as a financial counselor. My colleague, Andrea Carreño, is also here as well. She's going to be answering any of your questions you put in the Q&A section and is our other fantastic financial counselor with the center. And then we can get right into it. There is Andrea. So I'm going to go ahead and start with some information about how having a bank account is beneficial versus operating only in cash. So first off, if you are cash only, money is a physical item. So just like any other physical item you have, it unfortunately can be lost, it can get destroyed in a number of different ways, and it can be stolen. It also doesn't have any of the benefits, and we're going to discuss lots of the different benefits that come with bank accounts. But with cash, all of the benefits really begin and end just with the total amount that you have at any given time. It can also be really expensive to operate only in cash. And this is due to a number of different fees that you can incur when you're only operating cash. And we're going to cover these with check cashing, come along with deposit or prepaid cards and down payments. Now, if you do have a bank account, on the other hand, any money that you put into that bank account is insured up to 250,000 or more, depending on the type of account, through two different organizations. And that is the FDIC, that's the Federal Deposit Insurance Corporation, or the NCUA, the National Credit Union Administration, if you're using a credit union. You can also have direct deposits, that's money directly deposited into your account from your employer, and you can make automatic transfers from all of your different kinds of accounts you may have with your bank, your checking, your savings. You can move money to brokerage accounts even, or independent retirement accounts you might have with your bank. You also have the ability to have access to ATMs where you can do lots of different banking features. For better or worse, you can make online purchases. And you can also have access to debit cards to further access your money. There's lots of great special features as well with banks. You have the possibility for the bank to pay you in the form of interest for keeping your money with them. You can also now for free access your credit score and your full credit report at any time through many banking apps. And you can have access to electronic bill pay. Your bank statement can also act as a form of identity verification and address verification at places like the DMV, if you're accessing a variety of government benefits, and for a number of wellness programs. Now, there are, as I mentioned, we're going to get into some of the scenarios where operating only in cash may lead to increased fees. And the first example of that is prepaid cards. So we have the Venmo debit card, Visa payroll, or Uber instant cash outs as some examples. So first off, these cards are not always insured by the FDIC or NCUA. Sometimes they are, sometimes they aren't. You always have to kind of read the fine print with these and to figure out if they are, as opposed to a bank where you know for sure, bank or credit union, where you know for sure that you're getting that protection. They also can't always be used for every kind of purchase. For example, for something like getting gas at the pump, where it's not necessarily determined how much you're going to be spending, you can't always use these kind of cards for that. Also, the number of transactions that you can make with these cards can be limited. It's often limited in the sense that you have to pay a fee to be able to make more purchases or make more transactions. There's also more fees on top of that if you're not using the card enough to get it started and to put more money onto it. So we have some examples below of common fees. So there can be fees for ATM withdrawals, to put more money onto the card, and also for those transactions. You can see how they add up quickly. So we encourage you to exercise caution or consider getting a bank account, as we'll discuss further on. So another example where alternative to banks, where we encourage you to exercise some caution, is with fintech accounts or neobanks. These have become more common as of late. So these are going to be your Chimes, Affirm, Varo, or Cash App. So these would be considered a kind of banking style service where they offer deposit and savings accounts, but it is important to note that these are not banks. So some of the reason to exercise caution with these organizations, first off, is that with their customer service, they only offer these through a phone or an app. There are no physical branches. So if you have an issue that might need to be escalated, or you want to continue your banking relationship by speaking with someone in person, you don't have that opportunity. You also can't list account beneficiaries. And this is something that's a little less common with accounts, so I'll explain this a little bit further. So with checking and savings accounts, you can often add what is called a payable on death beneficiary, which can avoid the time and cost of probate. And adding these beneficiaries doesn't require a will or trust. And at most financial institutions, you can add and change them as needed for free. And it's a really important legacy planning tool to protect assets. And unfortunately, while you can get really important deposits into these fintech accounts and you can have all of your money stored there, you can't have this kind of protection of assets alongside them. They're also not directly FDIC insured. It's only through their partner banks. So it's through a third party. So while your deposits are protected, it is not through the organization that you have the account with. And speaking of the third parties, it's the only way that you have access to an ATM. And the final thing with that and the ATMs is that their ATMs also don't often offer all of the services. It is sometimes only withdrawal, and you have to figure out other ways to do the deposit, and you have to search them up. And so it's not as clear where the ATMs are. So we'll get into better banking alternatives further on in the presentation. Then, if you were to be paid only through a check with your employer, there would be some further costs with check cashing, and we can calculate this. So you can see the check cashing fee, transit costs, and your time. It's harder to put an exact number on transit costs and time, but we do know the check cashing fee, which is generally about 3% of the check's value. So if you have a $500 check, 3% is going to be $15. So that means that your take home of that check, the amount that you have to spend, save, is only going to be about $485. So if you do that bi-weekly, that's going to be $390 in fees per year. So you can see how that really adds up. As opposed to if you had, for example, a safe and affordable bank account with BankOn, which we'll get into later, you would have a variety of different options to get access to that money. You could deposit it with your mobile app, through your ATM, or even go in person and deposit with a teller. And then the last thing on this slide is we have this chart that shows the non-customer check cashing fees, because they do have those fees as well if you're not a customer with common banks there. Then another piece that you want to pay attention to with banks and your banking relationship is your check systems report. So the check systems tracks bank customer behavior, and in particular, any instances of what's considered fraud or abuse to banks that could have led to a bank account closing. And so one thing that you want to, if you've ever been in a situation where you haven't been able to open a bank account or it's been denied, it's possible that it's because there is a check systems report that is connected to your name. So you can go to checksystems.com and you can make an account with them. You can see what the situation is related to that, find out ways to solve that situation, or if it's incorrect for some reason, file a dispute. And this is something that you can definitely do with a financial counselor. And this is also a great segue into Mandy's portion of this presentation, where she's going to cover financial counseling and BankOn.
Thanks, Tori. And hello, everyone. Thank you so much for having me here today. Again, my name is Mandy, and I'm going to cover a couple of different services, including financial counseling and BankOn. So before we get into it, this is kind of the agenda for what we'll be talking about today. I'm going to touch base briefly on what the Economic Justice Center is, and then segue into financial counseling and then BankOn. So first, the Economic Justice Center. So we actually just launched the Economic Justice Center. We were previously Office of Financial Empowerment, and now we are the Economic Justice Center. And the mission of our office is to help San Franciscans build savings, reduce debt, and keep more of what they earn in their pockets. And then Next service that I want to talk about today is San Francisco Financial Counseling. So San Francisco Financial Counseling, it's a free, confidential, one-on-one financial service available to anyone who's 18 and older who lives, works, or receives services in San Francisco. And that can cover a wide range of things. That also includes if you have a public library card here in San Francisco, then you are qualified for financial counseling. Our counselors can meet with clients over the phone, over video, or in person, and they speak both English and Spanish, but for any other languages, interpretation is available. And all of our counselors are certified by the National Association Certified Credit Counselors. So, how can a financial counselor help you? Well, similar to what Tori mentioned earlier, they can help you open a safe and affordable bank account. They can also help you reduce and manage your debt. They can also help build your savings or build an emergency fund for whenever that time comes. And they can also help you establish or build a credit score. So, we know that talking about finances is really intimidating for a lot of people, and it's not an easy topic to talk about. So our counselors, they make sure that in every appointment that it's client directed, that the clients are in the driver's seat and they are steering the appointments. It's non-judgmental because clients are the best judges of their own situations. Our counselors are also focused on being supportive and helping the clients navigate the financial world, improving their financial situations, and also helping them to achieve their goals. Counselors are also really focused on empowering our clients to make sure that they know what their options are so that they feel confident making decisions about their finances. So San Francisco Financial Counseling, we partner with a number of different agencies here in San Francisco, and they help fund our work. So it includes the San Francisco Public Library, San Francisco International Airport, Department of Homelessness and Supportive Housing, the Mayor's Office of Housing and Community Development, San Francisco Human Services Agency, as well as the San Francisco Sheriff's Office. And then our counselors, we partner with three different nonprofits. To provide counselors to our clients, and that is through Balance, Financial Capability Investment, and SF LGBT Center. So the next program I want to talk about today is BankOn San Francisco. It is one of our oldest programs under the Treasurer's Office, and it was founded in 2006 with the purpose to help San Francisco residents find a safe and affordable bank account. So the Bank On account features, it's essentially a set of standards where we've said, this is a safe and affordable bank account. And Bank On account features include no minimum balance required for your account. It also includes no overdraft or other hidden fees. You can access your account online through mobile banking. You also have flexible account opening, and there is a minimum opening deposit of $25 and low monthly fees of $10 or less. And these are all of our different bank accounts that fall under Bank On. And I will hand it back over to Tori.
Great. Thank you, Mandy. Now I'm going to jump back in and talk about some different types of bank accounts. So the ones that I'm going to cover are checking, savings, money market accounts, and then also a type of savings account called certificate of deposit. So the first most common types of accounts, the first is going to be the checking account. So this is going to be your account that you're really using daily. It's going to be commonly where you get your paycheck deposited, and little bit later on, I'm going to talk about how this is an account where you can use a budgeting tool called the statement method, where you can track along your bank statement and use mobile app budgeting tools. But this is really an account where you're going to see money coming in and out, and you're going to see no or very low interest rate because you're generally not really using this account to store money for a long period of time. You also have the general savings account. So, as opposed to the checking account where you're moving money, this is going to be an account where you will only see about, on average, 6 withdrawals. So, you can only take money out of it about 6 times within a month unless you go physically in person to your bank. And this is an account where you are ideally putting money aside for the future and leaving it there. And this could be for just general emergency savings, or it could be for a specific purpose. Could be for retirement or college. Now, you also have money market accounts. These are a little bit less common, but they are kind of like a checking and savings account mixed together. So you're going to see a little bit higher interest like you would with a savings account. You're also going to have access to like debit cards or checks to be able to access the funds. You are going to see a minimum balance requirement. So that's going to be a minimum amount of money that you have to be able to open the account. You're also going to have that limited number of transactions. So even though you have that debit card, you wouldn't be able to use it on that like daily basis that you would with a checking account. And then finally, there are going to be a number of fees otherwise that you would see with this account. And then the last account that we're going to talk about is the savings account, which type of savings account, which is the certificate of deposit. So with this account, your money is quote unquote locked away for a predetermined amount of time. This could be for around like 6 months or even up to 5 years. But in exchange for putting your money away in this format, you're going to be able to get a lot more interest. And you, of course, can take your money out before that time period is up, but you would have to pay a penalty that would equal to several months of the interest that you would otherwise be earning on that account. And the some of them do not have these same penalties, but you are going to generally see that lower interest rate with that account. And then some of the things that you want to look for here is you want to understand exactly how long you would be putting your money away for, especially because you do have that potential for that penalty. You also want to see if it has a minimum balance. Is there a minimum amount of money that you have to have in order to start the account? Some of them don't even have this requirement. And then also, what is the interest rate that's offered with the account? And is it going to stay the same for the whole length of the account? In particular, you want to make sure that it is standard and not going to go down. Now, we've talked a lot about bank accounts, but how exactly do you open them? So there is some required documentation. So first off, you want to bring a primary form of identification. So this does need to be the original version of driver's license, ID card, a passport, armed forces ID, permanent resident card, employment authorization card, or a tribal ID. Any one of those, as long as it's the original version. And then you also want to bring along your social security number or your ITIN. Now, if you are a non-US citizen without a US issued ITIN, you will want to provide a government issued ID that provides evidence of your nationality or residence. Now, along with that primary ID and your social security number or ITIN, you do also have to bring along a secondary version of ID. There's a little more flexibility with this one because it can be something like an employee ID, a credit card with your name on it, or just some other kind of ID that's issued by a recognized business or government agency. There's a little more flexibility in what qualifies there. And then if neither your primary or secondary ID had your physical address on it, you will need to bring something else that proves your address. So this could be something like a utility bill or a school enrollment statement, or the post office even provides documentation that you can get from them that has your address on it, but just something else that has your address. Now, getting into some more of the benefits that you can have with the bank account. So, one of the ways that it can be really beneficial to have an account is building savings. So, with this, you can have, first off, automatic transfers. So, there's lots of different ways that you can do this. You can set up where they move a dollar every time you swipe your debit card, and it can be per day, or it can even be a specific amount that gets moved when you get paid. You can even have split direct deposits. So this is set up with your employer where they automatically set a specific amount of your paycheck to go into your checking account and then into your savings account. And then the final thing is that this is a really great way to physically separate what is to spend and what is to save, which is a super important habit to set up for long-term savings. And then another important aspect of having an account, and I kind of mentioned this earlier, is that not only do you have the account, but you are actually gaining interest on money that you put into the account. So this is when the bank actually pays you for having money in their account. And you don't just earn interest, but the interest also does something called compounding. So this is when you start earning interest on top of the interest that you have already earned. And then we have some of the current interest rates on different financial products. So we have interest on a checking account, which you'll see is lower, and then we have two different certificates of deposit. It's just loading here. There we go. And then you'll see that we do have a flag here that these rates do change frequently, so you'll want to reach out to your chosen financial institution to see the most recent ones. Great. And then another aspect we want to talk about is the annual percentage yield, or the APY. And so this is a little bit different than the interest rate because this reflects the total amount of interest on a yearly basis. So this reflects how much you will earn in total after all of the interest compounds. And this is important because the more often it compounds, the more money you will earn in your savings account, as it says here. Yes, so the higher APY, the more interest you earn, because that will mean your money compounds more often. And then here we have a great example of compounding interest. So we have saving $5 per month, totaling $60 per year for 30 years. So over time, interest starts earning interest on itself. And your money isn't just growing, it is stacking on itself. And time is really what makes that compounding interest powerful. And it also shows the importance of that banking relationship on building your savings. And having that account for a long period of time is really what can make your savings grow. Great. And finally, we get to what I spoke about earlier. And this is one of the ways that you can actually use your bank account to make your budgeting even more powerful. And so you can do something called the statement method with your checking account, where you can actually follow along and see money coming in and out easily, see deposits and purchases, and track your income along your bank statement. Nowadays, you can even take it a step further using a variety of mobile app tools. You can see one to the right. Many banks offer these in-app budgeting tools where you can see exactly how much you're spending in every area. And you can even set budget amounts in certain areas if there's places where you want to reduce and you want to set limits on your spending in any place. And this can make something like budgeting, which can be kind of a difficult thing to get a handle on, really seamless. And then on top of tracking your finances, you can also pay your bills online directly from your accounts. Great. And then we're going to close with some next steps. So the first thing is you want to consider how much you spend on bank fees. And this includes both check cashing fees and also how much you might be spending in monthly service fees as well. And then you want to ask yourself how much money over the course of the year you could be saving instead of giving it to a bank in the form of monthly service fees or to a check cashing business. Then you can go to the BankOn San Francisco website to see all of the safe and affordable bank accounts that are available there. And then finally, you can reach out to a financial counselor to discuss your individual banking situation, which you can do so by contacting financial services at sfcenter.org. Great.
And just as a friendly reminder, coming up this Saturday on June 13th is going to be the 2026 Affordable Housing Expo. It's free admission and it's going to happen at the University of San Francisco, so make sure to register today.